Hello and welcome to the session on case study on financial modeling. Please go to the Moodle website and download these two files, the case study in PDF and the case study Excel template. So we will be using the real life case study for a private company and then try to explain you how the three statement model works. The three statement financial model is an integrated financial model. So if you see the case study raw data which I have downloaded, you will find that you have the raw data coming directly from the case study. Then you have a blank income statement, balance sheet, and the cash flow statement. So these are the three statements which we are going to make as part of the financial modeling. In order to make this, we have management assumptions given in the case study. So we use those assumptions and build the three statement model. In order to have consistency in terms of the balance sheet getting the asset side is equal to the liabilities plus owner's equity, we need to prepare some additional supporting documents. So the supporting schedules will be working capital schedule, depreciation schedule, and debt and interest schedule. So once we prepare the three statement model, then we'll be ready for making the corporate valuation model using the discounted cash flow valuation. So the three statements are the inputs for the free cash flows which will be working for this. So this is a very much integrated financial model which will help you in understanding the bits and pieces and how they are linked and how they make the valuation in terms of the value of the firm and the value of the equity. So once we are done with the DCF valuation model, then we will do what we call it as the COMS valuation using the data from this. So let's focus now on how to build the three statement model. So this is what is the case study given to you of a private company. You have three exhibits A, B, C with future prospects which are given by the management. So we call this as management expectations of the future. So this is the accountant's notice to the reader pertaining to the accountants. So this is the income statement for the year ending 2017. Notice that the 2017 is the current year and it is arranged in this manner. 2017, 2016, so that means the current year will be the first and the historical year 2013 is at the last. But for our purpose of financial modeling, we put 2013 as the first and then 2014, 15, 16, 17, something like this. So simply copy and paste this in the raw data. Similarly, this is the balance sheet and this is the cash flow statement, plus the management discussion of future prospects about how the future unfolds for the next 5 years. Okay. So using this, we'll be using what we call it as forecasting the three statements. So we copy paste into the raw data sheet. You can move from one worksheet to another worksheet using what we call it as control page up. So if we are here, we can go to the okay, in order to move, you just control page up. In some cases you need to press control function page up and page down, so to move into the worksheets. So the raw data has been copy pasted, and as you see we have put 2013 as the first year, and then 2014, 2015, 2016. So all this has been copy and pasted. So from this raw data we take the income statement, balance sheet and the cash flow. So you don't have to do much, simply take the raw data and then copy paste in the income statement. So copy and paste it in the income statement. So when you are pasting, press paste special just the values. Okay, so you have this, and then remove the black ones and replace them with the formulas. Okay, so this is how we'll be doing. So for this, what is gross profit? Gross profit is equal to revenues minus COGS, that is the cost of goods sold. So once you have this, select the region and then Control R to copy to the right. Then the expenses, the total expenses are simply adding the salaries, rent, depreciation and interest. So the easy way to add is press Control Alt is equal to. So it gives me the formula of sum. Alt equal and then enter. You have the things, and then copy the same way, Control R to the right. Okay, and then go to the earnings before tax. What is earnings before tax? That is gross profit minus your total expenses. So you have the earnings before tax. And then net earnings. What is net earnings? Earnings before tax minus your taxes will give me the earnings, net earnings. So that finishes my income statement. Similarly, take the balance sheet data and paste it. Okay, make sure that you are pasting from cash. And then just the values. So once you have this, again similarly remove the totals and then put the formula. So what is the total? How we do that? Simply take I think you just take this and then take the format painter. Okay, so this looks good. Now total assets. Total assets means cash plus accounts receivable plus inventory plus property and equipment. So the formula which we'll be using is Alt equal to get the sum of all this, enter, and then Control R to right click. Then total liabilities is equal to accounts payable plus debt. So I get the total liabilities. And what is the shareholders equity? Shareholders equity is equal to equity capital plus the retained earnings. Okay, and then Control R. Now total liabilities and shareholders equity, that is simply adding the total liabilities plus the shareholders equity, and then Control R. Okay, so just observe you find that there is an error, right? So as soon as you copy, the error goes away. Okay, so that means our balance sheet gets tallied. That means the total assets are exactly equal to total liabilities. Okay, now coming to the cash flow statement, get the data, raw data from the cash flow statement and then paste it. Okay, Control C and then paste it at the net earnings. Same way, paste special values. Okay, and then select this format and put it the same format for the first column also. Okay, and then similarly remove the totals. Okay, so cash from operations. What are cash from operations? It simply is equal to net earnings plus depreciation and amortization minus changes in working capital. Okay, Control R to copy there. And then cash from investing, we don't have much, so is equal to this. Then cash from financing, we have issuance and repayment, so is equal to this plus this. And then you have closing balance. So the closing balance is okay, so I think we have to delete this also. We need to put the formula here. So what is net increase or decrease in cash? That is the cash from operations minus cash from investing plus cash from financing. So let's do that. Cash from operations minus cash from investing plus cash from financing. So you have this here, and closing balance is simply is equal to net increase or decrease plus the opening cash balance. Okay, so that finishes the income statement, the balance sheet and the cash flow statement. Now we work by integrating to the assumptions. So let's see how we can do that. So we can see that in the next video.